You work hard every day, whether it's at your job, at the gym, be it school. But the question is, have you put your cash to work? If not, you are leaving money on the table and inflation has been burning a hole in all of our pockets. So let's talk about why it's so important. Number one, inflation is well over 3%. We felt it for the last 4 years. The cost of living has gone up dramatically. So meaning your money is actually losing purchasing power sitting in a traditional savings account. The national average savings rate is only 0.45%, meaning that for every $1,000 you have in your savings account, by the end of the year, the bank is giving you $4.50. With inflation at 3%, your spending power drops to $970 at the end of the year, plus that nice $4.50 your bank is offering. In other words, inflation is eating into your savings. Yes, inflation is rough. Gas, groceries. With interest rates as high as they are, mortgages have gone through the roof. No pun intended. However, there is one silver lining to all of this, and that is the high yield savings accounts. Today, many of these high yield savings accounts are offering over 5% returns a year. So you're really leaving money on the table if you're not taking advantage of this opportunity. Think about it. We haven't seen rates this high since the 2000s. And so at least there's one silver lining to some of the pain we're experiencing with inflation and mortgage rates. That's why today, millions of people are taking advantage of the over 5% returns they can get on their cash simply by opening up a high yield savings or cash account. So today we're going to discuss 3 great options that each offer unique perks. We'll break down what makes each of these accounts stand out so you can really choose the one that best fits your needs. But first, let's discuss some of the questions and potential concerns you might have around high yield savings accounts. If you completely understand them, no worries. We have timestamps in the description if you want to move on to the account discussions. Number 1, is my money safe? So high yield savings accounts from reputable institutions are FDIC insured up to $250,000. Even if the bank fails, your money is still going to be protected. Are there any fees? Now, many high yield savings accounts do not have fees, nor do they have minimum balance requirements. The ones we're talking about today check both of those boxes. Now, how does the interest rate work? So typically interest is going to be compounded daily or monthly, and it will be credited to your account on a monthly basis, which is nice. So the APY, or the annual percentage yield, reflects the total interest earned over the course of a year. Can I access my money easily? High yield savings accounts offer easy access through online banking, transfers, and sometimes even ATM access. Be aware though of some withdrawal limits. Another question, will interest rates stay high? So interest rates will fluctuate based on market conditions. The Fed plays a major role in this. So just recently, Fed Chair Jerome Powell had hinted that they're likely going to cut rates this year. So don't expect these 5% rates to last forever. That is why I'm stressing putting that cash to work today. Now lastly, before we jump into some of the options, let's look at the potential downsides of a high yield savings account. Number 1, interest rate fluctuations. As we just mentioned, rates can change based on the Federal Reserve policies and market conditions. So 5% rates might not last forever. Number 2, lower returns compared to other investments. Yes, high yield savings accounts will typically offer lower returns than stocks, bonds, or your traditional mutual funds, which is why this is great for cash that you may need in the shorter term. If you're saving for a car, wedding, a new computer, or be it your 6-month rainy day fund. Interest income taxation. Interest earned on high yield savings account is subject to federal and sometimes state income tax, or for example, dividends that you're getting from stocks, they tend to be more favorable. However, you have the daily volatility of stocks, which you may not want for your short-term savings needs. And lastly, high yield savings accounts tend to be online only, so it might not be ideal for people that really prefer that face-to-face interaction. Okay, with that out of the way, let's dive into our 3 great options, all with their own unique offerings. Now at their core, they all offer insurance, have impressive rates, no fees, and no or very low minimums. So let's start off with SoFi Bank. Now with SoFi's checking and savings account, you're getting some great benefits. There are no account fees or minimum balance requirements, and they're currently offering 4.6% APY balances and a 0.5% APY on your checking balances. Your money is safe too, with FDI insurance up to $2 million through their partnership banks. Plus, you'll get a debit card, which gives you access to over 55,000 fee-free ATMs nationwide. So the app is quite impressive. Yes, they offer both the checkings and savings, but they also offer commission-free self-directed trading, automated investing, personal loans. They even currently offer a credit card with 2% cash back. So you're really getting a lot more than just a high-yield savings account with SoFi. SoFi also offers something called vaults, where you can create sub-accounts for different savings goals. And the money in these vaults are earning interest just like your main savings balance. An additional perk with SoFi is right now they're offering up to $300 cash bonus. And to qualify, you need to set up direct deposit, which is super straightforward. You just give your employer your SoFi account number and routing number. And once you've set up direct deposit, you can earn a $50 bonus if SoFi receives deposits totaling $1,000 to $4,099, or that $300 bonus if SoFi receives $5,000 or more within the first 25 days. Now, there are a few drawbacks, right? So the highest APY and sign-up bonuses require you to set up direct deposit, and rates are not as competitive as some of the competition. Even if you don't meet these requirements, you'll still earn a decent interest rate of 1.2% on savings and a 0.5% APY on checking balances. While it's not as high as some dedicated high yield savings accounts, it's still a lot better than what traditional banks offer. So this one is floated under the radar a bit, that is Vio Bank. So if you're looking for a high yield savings account that doesn't need direct deposit, this option might be for you. So regarding Vio Bank specifically, it's their cornerstone money market. So this account is a fantastic option if you're on the hunt for high yields and simplicity. So Vio Bank is offering an impressive 5.3% APY right now, which is among the highest yields available. With only a $100 deposit, it's an accessible choice whether you're just starting to save or you're looking for a place to park your money. Now, while Vio Bank may not offer all the bells and whistles that some of the other apps do, like investment features or trading capabilities, it's perfect for those who really just want a straightforward high yield savings account. So if you're in the market for a brokerage or a trading account, you might need to pair these with another app. Something to note here is that they don't offer a debit card, and while Vio Bank has investment services and portfolio management, these won't be integrated with their savings app. An important point of reassurance is Vio Bank is a division of Mid-First Bank, meaning your deposits are considered Mid-First Bank deposits for FDIC coverage purposes, so your money is insured up to $250,000. Best of all, there are no monthly fees as long as you go paperless. So if you're looking for a simple, high-yield account to grow your savings without any hidden costs, Vio Bank is a top contender. Last but not least is Wealthfront, my personal favorite for all my personal finance and investing needs. First up, with Wealthfront's cash account, they offer a very competitive 5% with no minimums and no fees. So a nice little perk they're offering right now is if you refer a friend to the cash account, you both get an additional 0.5% on your cash account for the next 3 months. Also, security is a top priority. Your funds are FDIC insured up to $8 million, thanks to Wealthfront's partnerships with multiple banks. So for all those ballers out there that have a few $1,000,000 to park in cash, I envy you, but also this is a great option for those as well. Wealthfront also makes it incredibly easy to access your funds. You get unlimited transfers and same-day withdrawals at no cost, ensuring you can move your money whenever you really need it. Plus, they do offer a debit card like SoFi. Not as impressive, you only get access to 19,000 fee-free ATMs to places like Target and CVS, so still pretty impressive. So similar to SoFi's vaults, you can also route deposits to your short-term and medium-term savings goals to help really manage your finances more efficiently. The app also includes investment features from commission-free stock investing to automated stock investing that will invest according to your own risk score. And this also includes tax loss harvesting. So essentially, tax loss harvesting helps turn a dip in the market into a tax deduction. So when you claim a loss on an investment, you can then lower your tax bill at the end of the year, which means more money to reinvest. So in layman's terms, this is ultimately improving your after-tax returns. So it's pretty impressive, right? These harvested losses can actually be applied to both your capital gains and up to $3,000 in ordinary income annually. And if you do want to choose Wealthfront, just some things to consider, right? Wealthfront is an online platform, so if you do prefer that face-to-face interaction, just know that that's going to be a drawback there. In addition, there are no cashback rewards for spending like some of the other accounts. Now, I know there are many great options out there to choose from. These are just a few options that I felt were extremely reputable and also are different enough to kind of give you an idea of the variety of options out there when it comes to high yield savings account. Do you want sort of a bare bones option where you're just getting the high yield account? Do you want sort of a bank-like option? Or do you want a nice combination of investing and the high yield savings cash account? And I know things are expensive, inflation is a pain, mortgage rates are nuts, but there at least is that silver lining of, a cash account giving you a good 5%. And so hopefully you can put some of your savings to work. If you found any of this helpful, please like and subscribe. We're going to continue to create content based on your personal finances and investing journey. So we'll see you next time.